It's been a volatile last few days and also a great time to make money on the markets. Of course, it comes with risks, but I hope following last week's updates and the updates I've been sharing with you over the last couple of months, you were ready for what happened last week. I'm talking, of course, about Liberation Day and how that impacted the markets. Let's talk now what may happen next and build on what we discussed. But before that, I need to stress that trading financial markets, unfortunately, is high risk and we may lose all of our invested money. Moreover, I will share my view on the market, but that does not make it investment advice, and I encourage you to do your own research. Okay, so Liberation Day, or as I like to call it, Obliberation Day. That's actually somebody else that coined that, but I've been using that, and you can see that on the articles I share on Thinkmarkets.com. What's happening here is quite straightforward. The tariffs that Trump implemented were far higher than people thought would be. Here, for example, we have the tariffs. If they would have been met, we would have been in a good situation. So as discussed before Liberation Day, we said that India and Turkey could be badly hit because they have the highest tariffs. And we're looking here maybe 12 and here 11%. That was at the high end. So when they come out with these tariffs, they're substantially higher. Obviously, that hurts the economy. But there's more to it than that. What's interesting is that when Trump was speaking, he was talking about the non-tariffs trade barriers. He's talking about VAT. He's talking about the fact that Europe doesn't buy agricultural products from the US. Talking about IP transfers in China. He said that was far more worse than the tariffs. That put me on alert and told me there was time to short sell, something I did in crypto markets. And the reward arrived a few days later, today, Monday, actually, on April 7th. Now, what's interesting here is that it's very difficult to fix those issues, and they don't go very quickly. Over the weekend, Trump has says, citizens, hang on, we're gonna make this. It's gonna be great. And Navarro from the US government said as well, is that it is the non-tariff barriers that are the issue here. He even mentioned VAT, which is at 19% in the EU. But what they don't seem to understand is that the VAT is something that is applied across all goods. It doesn't matter if the product is made in Europe or outside of Europe, that VAT is going to be added. And that is a big warning sign that potentially people advising Trump or Trump himself doesn't understand how certain things work. They're right about the other bits, the agricultural limitations, IP transfers in China. Long story short, what's happening right now is that the markets are on a free fall, and Trump was asked if China would lower their tariffs, would that mean that the US is going to remove its tariffs on China? The answer was no. Why? Because the goal of the US government is to balance the trade between one country and another. That's why the tariffs are set where they are. So what's happening here is that they want manufacturing to move from China to the US to generate jobs in the US. It does make sense. It's unfortunately something that could put us into a recession. Just to give you an idea, if all the tariffs are implemented, the average tariff rate is going to be close to 24-25%. That's much higher than what we saw in the 1930s. And in the 1930s, trade in the world dropped with roughly 65%. But the world today is much more interconnected than it was in the 1930s. So we might even see more drops in trade. The other thing as well is that the stock market at that point declined with 80% from when the tariffs were introduced in the summer of 1930s until they were eventually removed. And what was needed for the tariffs to be removed? A new president. I'm not saying that's going to happen now because I think Trump is much more sensitive to what's happening in the markets. But right now, telling his people to hang on, telling people that they're not going to remove tariffs until the trade balance has been fixed will take a couple of years. And hopefully he will see with stock markets declining another 20-30%, that maybe that's not the right way forward, because there's other way of motivating people to work. And it's also what's really interesting is that if you look at some big companies like the car makers, if you look at companies like Nike, it's American companies, and they are sending work overseas. They are offshoring, okay? They are the ones that are producing their shoes in places like Cambodia and Vietnam instead of doing it locally. The problem is this though. I'm not a US citizen. I live in the EU. And I wouldn't pay another $100 on top, or even $50 on top maybe, to buy a pair of Nike shoes. And that's the challenge. Do you want to be able to consume, or do you want to have a job? And that's the problem. Because think about it realistically. For Nike to remain a viable company, they will need to bring in robots. So even if they will bring back manufacturing to the US, I don't think it's going to be such a big boom. Long story short though, is that if we see anything similar to what we saw about 100 years ago, then we're not done yet. We had some other data last week as well, but the problem here is that we're realistically looking in the back mirror. We're not looking in what's happening ahead of us if we only use this data. So the NFP jumped up to 228K, which was higher than the 177K anticipated. The EDP as well improved. On the other hand, the 2 prior months were revised lower. So actually, NFP was actually weaker than we thought for Jan and Feb. Now, this is all fine. But look at this, what consumers think in the US is going to happen with the NFPs. The correlation is not great, but you can see they are relatively well linked. And we're seeing that big drop here. And that would indicate that NFPs could be down anything at least negative, maybe 100, 200 per month. This is another report from the Challenger Economic Indicator. And here they ask companies what they think is going to happen in the future. And you can see that we have spiked higher than what we saw in the great financial crisis in 2008 and higher than the dot-com bubble. We're obviously not above the COVID levels, but we're at really elevated levels. Now, what's important is that the 5%, 10% minimum tariffs that have already been implemented, the next set of tariffs will be implemented relatively short. There's still an opportunity for Trump to back off and don't go ahead with this, which could potentially avoid, because these for our expectations, the hard data, which we just looked at, this is the hard data, is not there yet. But the soft data tells us that things are going to turn worse. So what's my game plan then? My game plan is I'm waiting for the EU to take action that could potentially cause the market to trade a bit lower. And then after that, I think we can have a bit of a bounce. But I don't think the term outlook is going to change just yet. I'll show you the charts in a minute. But I do think maybe we can get a bit of a bounce. In fact, we're already starting to see a bit of a bounce now. But we're still waiting for that hammer blow, the EU retaliating. What other events are ahead this week? We have the New Zealand Central Bank rate meeting, and they're anticipated to cut with 25%. Why? Because their annual GDP is down with 1.5%. Their inflation rate is at 2.2%. It's been there for 6 months. And the unemployment rate levels is pushing to the upside. Now, I suspect they might cut with 50 basis points. Plus, there's a very nice technical setup, which I will show you in a minute, which could potentially allow us to short sell New Zealand dollar versus the USD. So that's what I'm watching. FOMC minutes, I have them there, but I'm not watching them. Even though, of course, I do want to know what they think about tariffs, but it's unlikely they're going to have very strong comments on tariffs. Also, the head of the central bank, Jerome Powell, told us that he is not waiting because tariffs will ultimately rise inflation. Prices are going to go up. On the other hand, tariffs will also kill the economy. So he's waiting. And that's actually not too great. If he really wanted to help, they will go out and cut rates right now. The problem is though, we'll have inflation later, pretty much like we had with COVID-19. So what else? Unemployment claims. That's weekly data. Something we definitely want to keep an eye on. And then we have inflation, which unfortunately is again a bit looking in the rear mirror. This data is anticipated to drop a bit more, but of course, it's all about what's going to happen in the future. So I wouldn't really pay too much attention to this. And what I would pay attention to is preliminary University of Michigan consumer sentiment. We're looking up, looking positive. Trump got elected, it was positive in December, but then all the talks of trade tariffs in January and February caused the market to go down, and we have seen a complete tumble, and there's a high risk we're going to drop below the level seen in May here, 2023. We're looking at Euro USD, and it's holding up relatively well for now. The reason for this bullish move here is because people are fleeing and dumping US assets. On the other hand, they are dumping New Zealand dollar versus USD, Aussie dollar, and also GBP USD is down. We'll talk about that in a minute. Now, in the very short term, we pushed above this high, which is now support, and I would be bullish about 108.77, looking for the price to bottom out here as it's doing right now, and then push to 110.86. But it's not my preferred setup. If I would be forced to trade Forex, then I would prefer to look at something like New Zealand dollar versus USD. And I'm finding this very interesting in the light of what's happening in the world. You got a triple bottom, low here on October 2022, another low in January, and then another low today. And measure from here to here, we could drop all the way down to 0.4719. Now, we don't necessarily have to trade all the way down there. It could be that we are just going to go maybe to 50, but even at that point, say if I would good short here, if I would short, you're looking at a stop loss of maybe 100 pip to make up to 500 pip return. So that's a 5x. Crude oil prices are also interesting. So we were looking at this double bottom a couple of weeks ago, and we said low and low, break here, and we're going to trigger this double bottom. And that double bottom has a target of 56.74. What's also interesting is that OPEC decided to increase output, or will increase output. Now, we could have a bit of a squeeze all the way up to the double bottom neckline, and I would be bearish from here as long as we trade below 69.83. But I am unsure we're even going to go there. I think we might just go to the August 2021 low at 64.88, and between that level all the way up to these highs here, I think people are probably going to short sell, targeting the March 2021 low of 60.58. In the terms of gold, gold traded below this low, sweep the lows, so took everyone out, and is now bullish. And I think as long as you trade above the low that we just saw here on Sunday, we might have a bit of a dip, but I would say between these levels here, I think we can push to the upside. Now, this is the Nasdaq 100, and we have dipped substantially. And again, we're still waiting for the EU to react, so I don't think we have seen the worst of this. But because of the very strong slide, it wouldn't be unreasonable to maybe have a bit of a bounce from the lows all the way up, maybe some 10% or something like that. But that's not going to change the big picture. And I'm still, again, waiting for the EU to react. So what I'm looking for here is probably up, and then people probably going to short sell. And as long as we trade, I would say, below 19,184, realistically, people will look to short sell. So we might go up to 17,500, maybe 18,000. And then from here, I think this bit here, people will be quite keen on selling. Now, if you're a long-term investor, is this a very good time to buy? Yeah, maybe. The problem is, how's Trump going to react? If Trump goes from saying, okay, we're going to postpone everything, this is not really working out as I wanted to, then you can have that V-shaped reversal. The problem is here, how is he going to save face? That is the issue. I'm not sure he's going to be able to do that at all. With that in mind, I think that it is possible to buy dips, but I would prefer to personally to maybe look to buy a dip at a lower level. So you see here, from here to here, we dropped with 37%. Same thing would happen here, you're looking at 14,000. I think that would be an interesting level. And of course, if it goes really crazy and we dip 50%, then that is also interesting. Just need to bear in mind that there's still a good chance that we drop even further. I don't think we're gonna do like an 80% slide like would have been like happened like 100 years ago, but if it would be, but we can't rule it out. Yeah. So what are the things we can do to avoid getting into trouble? One way to really avoiding the trouble is just wait for the price to catch up with the 200 moving average and then push above it. Last time we traded below the 200 moving average, we spent a good 374 days below it, which if it would happen again, it means that the proper bull market is not going to start until March 2016. Again, this could be compacted if Trump decides to back down, or if other countries says, okay, we're going to lower tariffs, and then Trump is happy with that. If they would lower, then it's going to be much easier to do business across the world. Okay, that's pro-business. The other thing as well is that Trump has promised to cut taxes. Now he wants to cut the taxes with the tariffs, and that's another reason why this becomes really complicated. But if he would agree just to reduce taxes and still agree to reduce his tariffs and then go ahead with tax cuts, then that's another very good reason why this could happen a bit faster. But for now, it's safe to say probably up and then probably down, and then maybe find a bottom between 16K and 14K, and then we'll see what happens here. As for Bitcoin, trend remains bearish below 88.8, and we're now reaching these levels where people want to buy. But I think realistically, we'll have that little bounce, then we're going to head lower again. I think it makes sense that people are buying crypto and they're bullish overall because what's happening in the US and deregulating the sector. However, there's a big chance here that this is going to be pulled lower if stock markets are allowed to continue to trade to the downside. With that, we're wrapping things up. Thank you.